Yo, I hope everyone is well and having a good week. This trade here, I'm trading the E-mini Nasdaq. I'm using the 2022 model ICT and also mixed with a bearish breaker. So the bearish breaker, if you draw it across, it lines up with the fair value gap. That was my entry. My stop was literally just above the mean threshold of the bearish order block. So I put it quite tight stops, but if price went a bit above the bearish order block, then price wasn't as bearish as I think, and it potentially could have just ran up the highs anyway. So we had a nice reaction off the order block and also off the fair value gap and bearish breaker. My first take profit, it could have been the consequent encouragement of this wick. You see that like long wick on the left, but it would be the low of that candle. So yeah, at the minute prices have just been bearish. There's no reason for me to take any profit at the minute. I draw across the consequent encouragement now in the minute, and you see it has a little bit of a reaction. But price looks like it just wants to run back up into that fair value gap. There's literally a fair value gap just below that where it just taps into that, which is nice. But yeah, look at the way it reacts for that consequent encouragement of the wick. Then also I drew the order block. Find the mean threshold of that and look how price reacts to that, which is really nice. So it keeps telling me that it's still bearish and that I should still be holding my profit. So yeah, once it reacts a little bit nicely, runs lower, takes some more profit out, leaving a little bit left to run. There's only a little bit left off open, sorry. And yeah, just have to be calm with it. Let's have a look. Still, there's a fair value gap there. Silver bullet 10 a.m. to 11 a.m. taps into that for it to then want to run the lows even lower. The dollar's bouncing off the new weekly opening gap, which is nice. So if it's bouncing higher, then we want to look at Nasdaq lower. So yeah, shout out to ICT. Thanks for watching and be safe.